Yo, son, what's good? It's your boy Eon, and you already know me. Look, son, this is Five Slow Stroking the Podcast, episode 89. Thank you all for rocking with me, son, for this long, son. In today's episode, Rich Trading Strategy, son, I'm going to teach you how rich people are trading during these unforeseen times, son, in the market. But first, I wanted to point out some things that I'm seeing from this CNBC article regarding spending as well as inflation, right? So the whole gist of this article is pretty much just to tell you all about how people who are making over 100K as well as people who are making 50K and under are all pulling back from their regular spending habits, right? And then the people who are wealthy, they also are pulling back from their spending habits, such as taking certain trips, right? Catching certain private jets. Maybe they may not fly private. Maybe they may fly commercial now, right? And just do like a first class ticket versus a private flight. So a lot of things are changing, right? In addition to that, they're not buying certain vehicles right now. They're not going on certain shopping sprees right now, right, son? So it's a lot of things that are being pointed out in this article, and I think it's very valid. It shows that a lot of people are trying to put their money in the right places. So in the article, they also mentioned that some places are not necessarily seeing a decrease in spending, right, son? So what places, you got to think to yourself, what places may not see a decrease in spending? And this is a given, son. The first things first, places that provide necessities, those are the places that you should see, consistent spending, if not more, especially during the times where people feel like, hey, inflation is high. I can no longer go out and do these certain things that I regularly do. So, son, I'm going to give you some companies that I feel people would continue to shop at on a regular basis, right? There are two types that I'm going to go over. The first one is grocery stores. And these are companies such as Kroger, Walmart, Costco, and etc. Son, there are other stores out there, but these are the ones that can be traded, right, son, and very popular companies. So I would consider looking at these companies because these are the ones that's going to produce consistent, earnings reports, whether it's from people talking about, oh, I can't go out and enjoy this luxury, lavish living, so now I got to cook at home. Think about it. I have to cook regularly. So if you cooking instead of going out to eat, you got to buy groceries, or you probably growing your own vegetables. So that takes me to the second one, right, son? Most people will try to back up on spending and cut back on spending. So you'll see a lot of DIY projects, son. So keep an eye open for companies such as Home Depot and Lowe's, right, son? These companies, allow you to get the tools, the lumber, as well as, a grill, or even like you could redo your whole home, right, son? So they have all the tools and everything you need. They even have a gardening section, right, son? So you could grow your own vegetables. So don't sleep on those companies as well. Those companies, those building DIY companies, right, son? So definitely Home Depot, Lowe's. Want to check out those companies as well. One thing that I saw in this article that really stood out to me, son, was the fact that it said key factors that CFOs are watching include the decline in consumer savings rate, how successful the Fed is in using its tools to slow the economy without pushing it into recession, which is good, right? So they're saying, hey, the Fed's not trying to put us in a recession, so they're going to do their best to make sure we don't go, but they're still going to do their best to solve the issues that we're having, right? In addition to that, they said, including raising rates to cool consumption and investment. Son, when they said raising rates to cool consumption and investment, that set off a light bulb in my head, son. And the reason I say that because, so it's like stop investing. What? Stop investing, son? Really? It's crazy that the press and the Fed are trying to get people to stop investing. If that's what's being meant by what I'm reading on this document, it's crazy, son. They want to raise prices so that people will purchase non-luxury everyday items. What did I just tell you? So I literally just told you to watch for companies that people will spend money at regardless. This is where a lot of those government big time people have their money, and those companies primarily because number one, they don't move much on a regular basis. They're very quiet. And number two, they pay dividends. Number three, son, everybody goes there. If you're not going to Walmart, you're going to Target or Target, as some people like to call it, right, son? Makes sense, like I just said, son. These people don't really care about the future or well-being of the individuals in this country, right, son? They really don't care, but so much, and you can't take it to heart. You just gotta accept it for what it is. But, son, I really wanted to touch on that, right? So please look at the companies that I told you about not too long ago. So next thing I want to get into is what we're here for, right? Rich people who are trading and wish to protect their wealth are eliminating losses by collecting premium on option contracts, right? I know you trade options. I know you buy calls. I know you buy puts. And then I know you make a good amount of money on it. You average trader, right, son? I know you do, and congratulations for that, son. But there are multiple ways that people are eliminating losses, especially the rich people, right, son? If they have their wealth and they want to protect their wealth, they're going to do their best to eliminate, risk. They're going to take risk off the table. So the best way to take a risk off the table is to know what you're getting yourself into, right? There are multiple ways to do this, but the simplest way is the most effective. And what is that, son? That is covered calls. And basically what a covered call is when you purchase 100 shares of a company or, more than 100 shares of a company, and you sell somebody the option to buy those shares at a given price, right? So you pick the price you want to sell it at. When you pick that price that you want to sell your shares at, they'll pay you the premium for that contract. So don't you know how you go through on Robinhood, TD Ameritrade, or whatever, and you go and you buy a call? Somebody sold that contract. Somebody was selling 100 shares in a contract, saying, "Hey, look, you could buy these shares if this price, if this stock hits this price on this day, right, on this expiration date." You can have these 100 shares. Just give me the money for the 100 shares plus pay me the premium, right? So that's all it is. Now, all you do, you went and you paid the premium, and now you're going to sell the contract for a premium. But what the wealthy people are doing, they're taking the premium. They're taking that high premium and they moving it straight into their account, right? They already have the contract. So that's more like a hedge for them, right? They know the market is kind of going down today, up tomorrow. So they're going to pick a decent strike price that wouldn't put them in the red. And they're going to collect that premium 9 times out of 10. If they're wealthy, they have over 100 shares. So they may have 500 shares, 1,000 shares. So 1,000 shares, you're doing 10 contracts, right? If that joint pays, if it pays $100 each, there it is right there. You get what I'm saying, son? So it's that multiplication factor that makes it so great. And I know regular traders may say, Eon, how in the world do you expect me to participate in that knowing I can't afford 100 shares of Amazon? I can't afford 100 shares of Costco, right? I know you thinking that. I know you're saying that to yourself. And that's fine, son. But there are other companies to choose from, right? There are other good companies to choose from. Number one, really, I'm going to just go through a whole list, right? You have Bank of America, Robinhood, Kroger, Twitter, Snap, Riot, and more, right? Even Lucid Motors. Why would I call out these companies? Because these companies are pretty much all under $100, right? And as long as you have $10,000, you can buy 100 shares or more of each of those companies that I just called out, right, son? If you kind of bullish on Bitcoin in the long run, buy 100 shares of Riot. Sell the calls, bro. Sell the calls. Collect the bread. If the calls execute and the money, you know what I'm saying, and they put that money in your account and they take those shares, buy another 100 shares and sell it again, son. Buy another 100 shares. Wait for the price to pull back. Plot your support and resistance. Wait for the price to pull back. Bam, son. Do it again. Keep doing it. Keep doing it because eventually, number one, your account's going to grow. And number two, you're going to see that you're not missing anything, right? So this strategy is great for two reasons I would like to say, right? Number one, less trading stress. You already know what you're going to trade. No need to look for more trades. You know what you're going to trade. Valid, son. Number two, for some of these companies you could collect dividends on. Kroger, Bank of America. These are dividend-paying companies, son. So you shall be valid, son. And, hey, if they take the shares, buy it again. Collect more dividends later. It's valid, son. And that is the strategy. The strategy isn't always what chart technique or indicator should I use. It's the trade itself. What trade should I use, right? And this trade will work. Literally, I feel like you cannot lose on selling calls unless you sell for a loss. So, look, son, this is Forever Slow Stroking the podcast. Thank you for tuning in. Don't forget, catch me Monday through Friday, every trading day, for the morning market conversation. Typically, it's before 9:30 a.m. Eastern Standard Time. But that's all I got for you. I got to go. Oof.